Have you ever wondered what makes Warren Buffett? Well, Warren Buffett, it's not just about picking stocks. It's about a philosophy, a way of life. Today, we're diving deep into Alice Schroeder's incredible biographies, The Snowball, to uncover the principles that built one of the world's greatest fortunes. This isn't just a book about money. It's a manual for living a successful and meaningful life. The title itself, The Snowball, comes from one of Buffett's most famous quotes. Life is like a snowball. The important thing is finding wet snow in a really long hill. This simple metaphor is the key to everything. The wet snow is your starting capital, your skills, your initial investments. The long hill is time. The magic happens when you combine the two through the power of compounding. Buffett understood this from an incredibly young age. As a kid in Omaha, Nebraska, he wasn't just playing, he was earning. He delivered newspapers, sold chewing gum, and even bought a pinball machine to place in a local barbershop. Each penny he earned was a tiny snowflake. He didn't spend it frivolously. He reinvested it, adding more snowflakes to his growing ball. This is the first major lesson. Start early, be patient, and let compounding do the heavy lifting for you. It's a force of nature, and Buffett harnessed it better than anyone. But where do you find that wet snow? This leads us to Buffett's core investment philosophy, which he learned from his mentor, the legendary Benjamin Graham. It's all about value investing. Forget the market noise, the daily charts, the hot tips. Buffett looks for businesses, not just ticker symbols. He wants to buy wonderful companies at a fair price. What makes a company wonderful? First, it has to be simple and understandable. Buffett famously says, never invest in a business you cannot understand. He calls this his circle of competence. If he can't explain how a company makes money in a few sentences, he moves on. This is why for years he avoided tech stocks. It wasn't because he thought they were bad, but because they were outside his circle of competence. Know what you know, and more importantly, know what you don't know. Second, a great company must have a durable competitive advantage, or what Buffett calls a moat. Think of a medieval castle with a wide moat protecting it from invaders. In business, a moat can be a powerful brand like Coca-Cola, a low-cost structure like Geico, or a network effect. This moat protects the company's profits from competitors, allowing it to thrive for decades. When you see a company that has consistently high returns on capital, chances are it has a strong moat. The final piece of the value investing puzzle is the margin of safety. This is another concept from Benjamin Graham. It means buying a company for significantly less than its intrinsic value. Imagine buying $1 for 50 cents. That 50-cent discount is your margin of safety. It protects you if your calculations are a bit off or if the business faces unexpected headwinds. It's the ultimate defense against losing money. And as Buffett's rule number 1 states, never lose money. Rule number 2, never forget. Rule number 1. The Snowball shows us that this wasn't just an abstract theory for Buffett. We see him applying it time and time again. Take his investment in American Express during the salad oil scandal in the 1960s. The market panicked, thinking the company was ruined, but Buffett did his homework. He went to restaurants and banks, observing that people were still using American Express cards and traveler's checks. The brand, the moat, was intact. He realized the company's intrinsic value was far higher than its crisis-level stock price. He invested heavily and made a fortune. He found a wonderful business, temporarily on sale, but this book is so much more than an investment guide. It's a deeply personal look into the man himself. Alice Schroeder was given unprecedented access to Buffett, his family, and his colleagues. The result is a portrait of a man who is brilliant and focused, but also complex and, at times, socially awkward. His relentless focus on his snowball came at a cost. The book explores his complicated relationships, particularly with his first wife. Susie was his emotional anchor, the one who understood him and helped him navigate a world he often found confusing. While he was laser-focused on building Berkshire Hathaway, she was focused on building a family and a life outside of business. Their relationship was unconventional, but filled with deep love and mutual respect. Her passing was a profound loss that shook him deeply, revealing the man behind the financial genius. One of the most fascinating aspects of Buffett's personality is his extreme rationality. He approaches almost everything from business to personal life with a logical, probability-based mindset. He's constantly calculating the odds, seeking to minimize risk and maximize returns. This is his superpower, but it can also make him seem detached. The book doesn't shy away from this, showing us the trade-offs that come with such intense focus. He dedicated his life to compounding his snowball of wealth, which meant less time for other things. However, as the snowball grew to an unimaginable size, Buffett's perspective began to shift. He started thinking about the why. What's the point of accumulating all this wealth if it just sits there? This led to one of the most significant moments in his life, his decision to give away the vast majority of his fortune. In 2006, he pledged over $30 billion to the Bill and Melinda Gates Foundation, the largest single charitable gift in history. He realized that the skills he used to compound money could be used by others, like Bill and Melinda Gates, to solve the world's biggest problems. His logic was simple. They were better at giving the money away effectively than he would be. He saw it as another form of capital allocation investing in humanity. This act transformed his legacy from simply being a great investor to being one of the world's greatest philanthropists. So, what are the key takeaways from the snowball? First, embrace the power of compounding. Start early, be patient, and let time be your greatest ally. Whether it's with money, knowledge, or relationships, small, consistent efforts build into something massive over time. Second, define your circle of competence. Stick to what you understand. This intellectual honesty is the foundation of sound decision-making in investing in life. It's okay to say I don't know. Third, always insist on a margin of safety. Give yourself room for error. This applies not just to buying stocks, but to making big life decisions. Don't live so close to the edge that one small mistake can cause a catastrophe. And finally, think about your own snowball. What are you compounding? Is it wealth, knowledge, goodwill? Buffett's life teaches us that the ultimate goal isn't just to build the biggest snowball, but to use it for a purpose greater than ourselves. His story is a powerful reminder that a life well lived is about more than just accumulation. It's about allocation, contribution, and leaving the world a little better than you found it. The Snowball is a masterpiece of a biography. It's an honest, detailed, and inspiring look at a truly remarkable life. It gives you the tools to think more clearly about business, investing, and what it truly means to be successful. If you want to understand the mind of a genius and learn lessons that will last a lifetime, this is a must. Thanks so much for watching. And if you enjoyed this deep dive, make sure to like, subscribe, and hit that notification bell for more content just like this. See you next time.